What if I told you that every market crash from 1929 to 1987, from 2008 all the way to 2025 has made a small group of billionaires even richer? Not by luck, not by chance, but by following the same three trades every single time. While the world panics, they quietly move their money into assets everyone else ignores. While the news screams recession, they position themselves for the recovery before it begins. Today, I'll show you exactly what these trades are, historically proven across 4 major collapses, and why the ultra-rich are preparing to make them again in 2025. Crashes aren't accidents. They follow a pattern: fear, forced selling, liquidity drying up, and then a violent rebound. But the world's wealthiest don't react emotionally. They act strategically. From the Great Depression of 1929, to the Black Monday crash of 1987, to the global financial crisis of 2008, and now the ongoing instability leading into 2025. The top 1% have learned how to turn collapses into once-in-a-generation wealth transfers. In this video, you'll discover the 3 recession trades billionaires repeat every cycle, how these trades played out historically, what signals they wait for, and how they're positioning in the current economic climate. Let's break down the playbook elites use to grow richer when everyone else is losing money. When a crash begins, the first thing the billionaires do is not to chase opportunities. It is to protect their capital with ruthless discipline. They know that every market collapse follows the same emotional cycle: panic, denial, and forced selling. And while the average investor is frozen in fear or glued to the news, the ultra-rich quietly shift into assets that can survive the storm. In 1929, wealthy families moved their fortunes into bonds, gold, and cash, while the stock market was still collapsing. In 1987, as Black Monday wiped out billions in hours, big money rushed toward treasuries and safe blue-chip stocks. During 2008, Warren Buffett famously said, "Cash combined with courage in a crisis is priceless," as he increased liquidity and waited patiently. Today, leading into 2025, the same pattern is repeating. Billionaires are stacking cash, loading up on short-term bonds, increasing gold exposure, and trimming risky positions. Because they understand one thing perfectly: the first rule of every crash is survival. You don't make money by being brave in the panic phase. You make money by being protected, liquid, and ready for the moment the real opportunities appear. Once the initial wave of panic settles and markets look like they will never recover again, that is when billionaires make their second move. They quietly start buying what everyone else is dumping. Throughout history, this has always been the phase where the biggest fortunes are made. After the 1929 crash, while the public had given up entirely, wealthy families accumulated shares in companies that would later become American giants. In the weeks following the 1987 crash, investors like Buffett and Soros moved in aggressively, buying solid businesses at discounts no one thought possible. And in 2008, when global markets were drowning, billionaires scooped up distressed real estate, broken bank stocks, and tech companies trading at 70% off. This phase is never obvious. Feels like the world is ending. The news screams depression. Social media spreads fear. But the ultra-rich follow a simple principle: when the world is forced to sell, they buy. In 2025, similar cracks are already forming: over-leveraged companies, rising defaults, and liquidity drying up. And as always, those with patience, cash, and courage are preparing to take advantage of prices that only appear once in a generation. The third and most powerful move billionaires make during crashes is one the public rarely sees. They don't just buy assets, they buy control. When markets fall hard, companies panic, credit dries up, and even strong businesses become vulnerable. This is when private equity firms, family offices, and elite investors step in with a strategy that has repeated itself for nearly a century. After the 1929 crash, wealthy industrialists quietly acquired entire factories, rail companies, and steel operations for a fraction of their value. In the aftermath of the 1987 collapse, takeover deals exploded as corporations became cheap targets. And during the 2008 crisis, private equity firms like Blackstone and KKR bought up real estate portfolios and distressed companies in bulk, turning the worst recession of the century into their biggest wealth expansion. This is not about buying stocks. It is about acquiring ownership, influence, and long-term power. In the lead up to 2025, rising bankruptcies, tightening credit, and corporate distress are setting the stage for another wave of acquisitions. The billionaires who survived the crash with cash in hand are preparing not just to invest, but to take control of the future economy. What separates billionaires from ordinary investors is not luck, it's timing. They never rush into a crash blindly. They wait for signals that tell them exactly which phase the market is entering. The first signal is fear itself. When volatility spikes and forced selling accelerates, they know it's time to protect capital, not deploy it. Then they look for cracks in the credit markets, rising defaults, tightening lending, and liquidity freezing signs that the panic phase is peaking. Next comes the major turning point: central bank action. In 2008, billionaires started buying aggressively after the Federal Reserve unleashed full-scale interventions. The same happened in 1987, and even during the Great Depression, when stimulus measures stabilized markets. Bankruptcy data, unemployment spikes, collapsing consumer confidence, these are not disasters for billionaires. They are indicators that the bottom is approaching. And finally, when insiders start buying their own company shares and valuations hit historic lows, the ultra-rich deploy capital with confidence. As we move into 2025, many of these signals are flashing again, suggesting that the cycle is repeating itself and that another massive wealth transfer is quietly underway. Today, in 2025, we are standing in a moment that feels eerily similar to every major crash before it. Markets are stretched, debt levels are historic, interest rates have squeezed both consumers and corporations, and liquidity is evaporating across sectors. Billionaires see the same patterns forming, the same stress cracks that appeared before 1929, before 1987, and before 2008. That's why they are increasing cash positions, moving into gold, and preparing for distressed opportunities. They know that when credit tightens and businesses can no longer survive, assets will become unbelievably cheap. They also know that political instability, global tensions, and energy shocks have pushed the world toward an economic environment where volatility isn't an exception, it's the new normal. As ordinary investors worry about the next downturn, the ultra-rich are preparing their three-part playbook: protect capital, buy distressed assets, and acquire control. The next phase of this cycle will determine who comes out stronger and who gets wiped out. But if history is any guide, the same strategies that built fortunes in 1929, 1987, and 2008 will once again define the biggest winners of 2025. In every crash, the world splits into two groups. The first group, the majority, freezes. They panic. They sell at the bottom. They wait for things to feel safe again. They believe crashes destroy wealth. But the second group, the elites, the billionaires, the long-term thinkers, see crashes for what they truly are: resets. And a new one is built. History has shown us that fortunes are never made during calm markets. They are made in chaos, in fear, in uncertainty. 1929, 2008, 2008, and now 2025. The names change, the headlines change, but the pattern doesn't. Those who prepare, survive. Those who act, grow. Those who understand the cycle, rise. And that's the message of this entire video. Crashes don't choose winners, actions do. The question is not whether another crisis will come. It's what you do before, during, and after it. Because the greatest wealth transfer of this decade is already underway. And the window is closing faster than most people think.